All right. Good morning. Good morning, everybody. We're still in hurry up and wait mode. The auctions are what everybody is looking for. We have some data also worth keeping an eye on. Japan's 10-year bond tonight and the US 10-year tomorrow. It doesn't seem like it should be enough. And yet the market is waiting on this important data. We can see Japan basically flat, UK up 1%. Still going to get more data out of the UK today. A lot of Fed speakers over there, central bankers. The Dow, the S&P, the NASDAQ, all just parked and waiting. We can see we have Kashkari at 11:30 and consumer credit at 3. It doesn't show this 10-year as being very impactful tonight with Japan. And if you look at the 10-year for tomorrow, it also doesn't show it as very impactful. But there's a time and a place. You know, we just got through QRA. That heightens how much these have impact on the market. And they always do. It seems like I've been the one beating the drum about these auctions as something that day traders need to focus on for a couple of years now, and I don't see any reason to stop. There's still a lot of discussion on whether or not we're going to get an interest rate cut. Remember, we can speculate all we want, right? And I've got an opinion, more than one. We all have an opinion. But we have tools for that, right? So we can trade what we guess, what we assume, can have our own bias, but we can also take a look at what is being priced in. This is the Fed Watch tool. It's free. You don't need an account here. And these are trades that are happening, right? There's the ZQ24 contract. And as that contract gets traded, it is being evaluated as a representation of what the market expects the Fed to do, raise rate, cut rates. So this is, in one way, money being placed on the idea of a cut or whether or not we're going to cut at all. It's not fortune telling. It's going to be wrong from time to time, just like any other trade put out there is going to be wrong from time to time. But it is the collective money, not even the collective wisdom. I don't even like that phrase. This isn't a consensus, right? They didn't go around like in one of those surveys and ask everybody's opinion. They're looking at where the money is being put. And right now the money is showing 2 cuts. I look around and you know, I don't see any reason to cut. So if I'm going from my bias, I don't see a cut this year. I think the Fed is more than willing to wait it out and not cut until they have a reason to cut. You know, they like having the option to cut as a safety mechanism. If they need to cut, if they need to assist the market, they'll do a cut, like a little bit of the plunge protection team, right? Come in and play save a hoe and pick the market up. They've done that so many times in the past. And if we're already at zero, they don't have any ammunition to fire off, right? They don't have a cut that they can use. So right now, they've got a lot of ammunition. They've got a lot of tools in the toolbox if they need to play save a hoe and pick this market up. And until they need to do that, I don't think they're going to cut. Now, that's my opinion. And there's a lot of people out there that have opinions. So there's nothing wrong with considering for yourself what this market is going to do and whether or not the Fed is going to cut. But these tools are there for a reason. Use them to evaluate what the money is doing. When my bias is so completely different than this, I mean, I don't mind being a little off, right? Nobody's perfect at. But if my opinion is so completely divergent from this data that I'm on the other side of the fence completely, then I start to get a little suspicious and I start digging around asking, why am I so far off or why are they so far off? Because if I'm really divergent from what this says, one of us is completely wrong and I want to know more about it. Usually what I find is there's some information that I missed somewhere that adjusts my bias a little bit. And then other times there's just nothing to find, of course. And that is true. The election has to be taken into account. You know, it absolutely has to. Every single sitting president will use whatever tools that they have available to make themselves look good and to get votes. I mean, that's what you do when you've sold yourself out, right? And every person who ever makes it to the White House eventually has to sell themselves out. No different than going to Vegas. So tonight, the 10-year on Japan. Tomorrow, the 10-year in the US, which is kind of a big deal. CPI is on the 15th, so we're still at least a week away from that. Yeah, next week. You can see we're going to get a lot of data out of the European Union. And if you haven't caught on to why that's important as a day trader, consider the fact that Europe closes while our markets are open. And if we happen to have run up because of Europe and then Europe closes, we'll likely fade out. Opposite direction, if we've sold off because of Europe and then Europe closes, we're likely to pop back up. If we're sitting sideways because we're waiting on data out of Europe and then Europe closes, we're now free to run. So you want to pay particular attention to those mornings where we're getting data out of Europe, because once Europe closes, whatever impact it has been doing to the market very often is maybe not completely negated, but is drastically reduced. So their influence wanes, and then we have the opportunity to do something else. I didn't catch the whole story, but it looks like Boeing yet again screwed things up, this time in space. That was what I kept hearing on Bloomberg this morning. Something about a valve that may or may not pass and that they may need to replace a valve before they can launch. I don't know about you guys, but if I was doing anything related to space exploration and rockets, Boeing would not be my first choice. I don't even like flying anymore if I think Boeing had anything to do with the plane that I happen to be on. That's bad, right? That's that's the way it is. No faith. And if the average consumer doesn't have any faith in their product, what do you think the institutions are thinking about their product? We don't have the AM edition of the Spot Gamma Founders Notes. So I don't have the context on this yet, but to me, it seemed like when I was looking at it on TradingView this morning, that the put wall is really close, and so is the call wall. It feels like it's really close. This is not a very wide range here, 50 points, and I would want to see this change. It would be bullish to see them roll that call wall higher. I feel that it's bullish that they brought the put wall up. I just find it odd that they didn't also move the call wall. So I'm really interested in reading those notes this morning and seeing if they can provide some context or some insight into the adjustments that we've seen here. Because on the one hand, bringing up the put wall, I mean, that just feels bullish, but I'm stuck on that call wall of why it didn't move. So hopefully we'll get some clarity on that. When I get it, I'll post it. I know sometimes it's a bit of a read and it comes out late. So then you feel like, maybe you can just read it later. And I don't get anything, for sharing it. And I'm not trying to promote it, but it's information, usually useful information, especially if you're day trading. So today of all days, I would recommend that you take a few minutes to read the Spot Gamma Founders Notes, the AM edition, when they finally come out with it, and see if they provide some insight on this call wall. Otherwise, right now, we have to anticipate that if or when price gets into that call wall, that it's going to sell off. Till something changes, that's just the bias that we have to have right now. Check the sometimes they come out with that thing after I've started streaming. Nope, they still haven't come out with it. So the volumes are normal, sitting around a 70. It's fine. We still got a couple of markets that are closed, so it's not too big of a deal. There's no hedging yet. We don't see a market maker move, and the volume is better than yesterday, so there is that. We're riding comfortably above the weekly pivot point. Try to zone in through all this mess and point out where the daily pivot point was yesterday. Way down here, 51.42, and we did not hit it. So that makes today day one on a missed daily pivot. Now, the pivot was spotted yesterday. The fact that we hadn't hit it, I pointed it out yesterday morning, but it doesn't count until today. And I don't use this as a trading strategy, although you could. I just really use it for analysis and context. And it's not the end of the analysis. So I don't get to that and say, well, now I'm bullish or now I'm bearish. It's just one more piece in the puzzle. I would give it the same amount of weight as whether or not we're above an anchor on an anchored VWAP or whether we're inside day breakout. It's just one piece, not all the pieces. So it is bullish. It does have weight. There is some context to a missed daily pivot. And if you have not heard about it or watched any videos or read about it, just go to YouTube and type in missed daily pivots. You'll find it. It's not my strategy. And like I said, I don't trade it, but that doesn't mean I don't think it's valuable. Today also, we have a missed daily pivot. So far, we haven't hit it. Now, I don't talk about these very much, mostly because it would just be another thing that we would have to eventually go through. But there are these two yellow lines that are surrounding my daily pivot. Those are channels lines. These channel lines use a little bit of math, and it's not S1, R1, S2, R2. It's not those. That math is completely different. This is just a pivot channel. If you were to go looking for it, it would be like looking for CPR, channel pivot ranges, right? So on a day-to-day basis, you want to look at that range. I look at it every day, trying to gauge if today has the capacity to be, quote, one of those days. But one of those days where we just run and run and run, and it seems like we can't go any farther because we've already gone so far, and then it just continues to run anyways, and we just keep running. Up or down, doesn't matter. We tend to get those kind of days when the channel is very narrow. If you look at the spot gamma notes that I post every day, they have a different way of answering the same question. Is this a day where we could really expand and run? They use gamma. They have a gamma level that they focus on. And their gamma level starts at a -4 and goes all the way up to a +4. It's the spot gamma index. So it's the same concept, same idea, that we can get a feel for the day and have a pretty good idea. Is this the kind of day where we're going to really break out and run, that we would want to buy into strength and continue to push higher, and or sell into weakness and continue to push lower? Or is this a day where we want to play reversals and we sell into strength and we buy into weakness? So when you can use the spot gamma index, I think they could throw gamma in there one more time. When that thing tells you to play sideways, play the range, and then the pivot channel tells you to play sideways, play the range, right? You just get one more piece that's telling you today is not expected to be, a big breakout trend day. So a really wide channel suggests that we're not going to have a really big trend day, or that we shouldn't have a really big trend day. News can always pop us and run, right? There's nothing that spot gamma or pivot point channels or anything else, nothing can change that. If the market gets frisky because some news comes out and it just decides to break and run, then it's just going to break and run. It's just the way it is. And I was talking with somebody yesterday who said yesterday was a great trend day, and I would disagree with that. But if you liked it, then great. It was tradable, but this is not a really good trend day. We chopped sideways, then we popped up and chopped sideways again. And then if you're a power hour player, you got a little bit there at the end. We did keep above VWAP, and there was some opportunities, but it wasn't like one of those, amazing days. It's just okay. And I would expect the same kind of okay today, because we're still waiting on data. It's not enough for them to hedge. It's not enough for them to sit out. But you can just see how this market's not participating. We're not going anywhere. We're holding out, waiting on some data. So if you didn't like yesterday, it's very likely that you're not going to like today either. There are other things to play. Got crude and gold and even Bitcoin futures. And I say futures because I'm not suggesting, that you go play Doge and sushi and Ethereum, whatever. They've got a ton of them, right? Come out with new ones every day. But the Bitcoin futures, there's 3 Bitcoin futures: the big one, then a medium-sized one, and then a itty-bitty tiny little one that risks 5 cents. Seriously, like 5 cents. So, if you're on paper as a trader and you still haven't gone live yet and you're wanting to go live, trade that thing. I mean, at least then you're really trading live instead of paper. And it's so tiny that even if you're wrong, you're not going to rip your account apart. It gives you an exposure to the live market, just getting out of paper a little bit. So there's always something to trade. And usually if the indexes aren't doing anything, rather than trying to trade the indexes on those days, take a look around, see what else you could find. I mean, if you got the margin for it, you could trade VIX futures if you want to. So looking at today, think about where the ADR levels are. We got 51.68 on the downside, 52.41 on the upside. And this is a pretty noisy chart. There's a lot of stuff going on. So we'll just mark that range out. That's the range. And right now we don't really have a bias one way or the other. If we were a lot closer to one or the other, then we could say, oh, we're likely to hit the upper end, if we were close to the upper end, or we're more likely to hit the lower end if we were all the way down here towards the lower end. But we're right in the middle. I mean, look at what we've done on the day. We haven't done anything. So we're right in the center of the basketball court at this point. We could go either way. The only thing that we could say at this point is that we opened above the daily pivot point and the channel on that pivot point. And then we have a little bit of a bullish bias because of that put wall. We're above the volatility trigger, the 0 gamma, but we are right underneath that call wall. And that call wall is in front of the ADR level. We would have to get through that call wall just to get there. So if we fade, we've got pivot points and structure. And if we try to rise, we've got structure. Kind of caught, trapped here. Something's got to break. And I think it's going to break with news more than with price doing something. We are getting a little bit of a zipper or a reciprocation. What we got on the bottom under VWAP, we got on top under VWAP. We're going to expect it to expand a little bit of a time, like a megaphone pattern. We would just expect this range to continue to widen out because liquidity resides on the other side of the pivot until eventually something breaks, right? We did inside day breakout and then came back in again. Once is fine, but now we've set that Globex high, and that's now the level that we have to get through. $10-day, 30-minute volume profile. We don't yet have a high enough level here to consider this like a classic B shape yet. And we haven't built out enough volume here for it to be a capital B yet. We no longer have the D shape because of all of this. So we don't really have much of a pattern here at all. In the books, they'll tell you that you could go ahead and consider this a B, but I don't like to do that. A really good profile would show a B as a really skinny area like this, minus that little bit at the top here. It would be really skinny and then a lot of volume like that, right? That would be a classic B. These high shelf areas discount that. I get it. I know a lot of you have reached out and said you don't really understand what I'm talking about on this page. Those profiles, it's been around for a long time. There's a lot of old material on this. If you go to Google Scholar and type in volume profiles and maybe volume profiles ABC, you will find material on this. A lot of days, there's nothing here. And that's okay. It's all right to have an indicator not giving a signal. Most indicators, most of the time, are noise. They're not giving you a signal. And I think that's what screws people up. But when there is a signal on that indicator, then we want to be able to point to it and say we got a signal. Having one of the letters in that alphabet would give us a clear signal and some context behind it. And then we could ask the next question, where's the point of control within that letter? But when it's noise, then we just want to acknowledge that there's no pattern, there's no signal. The point of control is underneath this. We did manage to break through that zone. There's a little bit of a discrepancy around 5180. We can see that there was a lot of volume here, but we didn't spend a lot of time here. So we ran up into a ceiling, hit a lot of volume at this level, and yet managed to drive through it anyways and got up to this next level where we also built out a lot of volume, and we've been here for a while, which is why we're starting to build this out here on the TPO. So a fade today back down into the 5190, 5185 area. Maybe not even just today, but over the next few days, if we happen to pull back, that would be a structure or a level that would get my interest or my attention. Well, that's a bad idea. Don't want to do that. We have a new VPOC from yesterday. That's really close to the level that we were just talking about. 5184, 5185, somewhere right around in there. The VPOC is 5183, basically just round up a tick. So if we do break through our own Globex low, we've got a nice shallow area here into 5195, and then below that, VPOC 5183. It's a point of control from yesterday. I always like going to this 5-day, 5-minute and seeing this very narrow, very compact profile, because it really just highlights this hurry up and wait scenario that we're in. And this pattern, I don't have a name for it yet. See that quite a bit. It really highlights that hurry up and wait scenario. And these 2 points are now the levels that you want to focus on. If we're going to expand like a megaphone, then we'll cut through these levels and we'll expand just a little bit more, and we'll come back inside the box. Same thing on the other side. And we'll just keep widening this out wider and wider and wider. Otherwise, if we're going to break and move, these are the levels that we have to get through. So you can just mark them like I did, their high point and their low point. It's just Globex high and low. But you can also use that quadrant tool and project a measured move higher and lower. And there's your levels. So we've been talking pure price analysis over the last week or two, talking about this pullback. This is a weekly chart on the SPX. We've been talking about this pullback and whether or not it is the start of a bigger move to the downside. My argument has been that before COVID, when we had a nice, really nice market, that a 5 to 7% pullback was always anticipated. We were looking forward to these because it was just a nice wash, right? If you run from, say, 4,100 all the way up to 5,100, you need to digest a little bit and get a wash and then start the whole thing over again. So a good 5 to 7% pullback is perfect. Shakes things up, flushes everything out, and then we get an opportunity to leg up again. But after the bear market, recovery out of it, and everybody looking at the Fed and all these different bricks in the wall of worry, there was, a lot of anxiety over, is this really just a pullback, that 5 to 7%, before we leg up and continue to move to the upside? Or is this the start of selling off and going at least halfway back down to that 4,100 area? We can use things like moving averages and Bollinger Bands, Keltner channels, all that stuff. But we can also just use price itself. All the textbooks will talk about this pullback here. And as long as we have not broke that low, then we don't have a trend to the downside. We have to have a low set. Check, we got that. We have to come up off of that low so that that low becomes a pivot point. Check, we have that. But at this point, we don't have anything else. We either need to break this high and continue to move to the upside, or we have to break that low and continue the move to the downside. Until either one of those happens, it's anybody's guess on whether or not this is just a pullback before continuing higher, or if this is just a pullback where we get a little bit of a bounce and we continue lower. Nothing in the world that's going to give us that answer. We can guess and assume. We can make really educated assumptions, by the way. It's not just like we're throwing darts at the wall. What's happening with the dollar, the 10-year, what's happening around the world, what's going on with central bankers, what's up with CPI, PPI, all the other economic data that we're looking for, we can project pretty well. So it's not just price and indicators. It's not just one chart, right? We don't have to stay on the SPX. We can look around, try to get answers. A lot of it would have to do with how earnings are going, how banks are doing. In the reports that we see from earnings collectively, what are most of the companies doing? Guiding higher or guiding lower? Because collectively, this earnings is going to tell us a lot about how the rest of the year is going to go. But we still need to either break that high or break this low. And we don't have the answers one way or the other. What we can do along the way, just keep track of our pivot points. We're above the halfback. So if we measure this pullback and we look at the 50% mark, we're on the top side. We're also back above the 10-week. That's a healthy market, a good market. A strong market is above its 10. Of course, we can add other moving averages, but the 10 is quick, heavily used, decent level to focus on. But price itself is above that halfback. So that's a good start. It's outside of this control candle from 415. That's a really good start. So if we pull back, if we fade through the week, as long as we're holding above 49.50, then a bearish market isn't here. We don't have it. We can't call it and classify that. Some analysts will say a bear market doesn't kick in until, a 10% move from the high. We certainly don't have that either. This has been just a really nice 5 to 7% pullback. We've set our pivot low, just like we're supposed to, and we're working our way back up. It is a gap on the weekly for the SPX. Yeah. Right there. And a gap up, that's bullish, right? So especially an unfinished gap or an unfilled gap. I like using the SPX when I go out to the daily and the weekly and I'm looking for gaps, because the ES closes those gaps a lot of times in the Globex. And so you really only see gaps on Sunday to Monday, right? Those kind of gaps. But during the week, a lot of that is just hard to see on the ES futures. So using the SPX, which doesn't have any Globex to it, makes spotting those daily and weekly gaps a bit easier. But so far, we don't have enough information to say that this is bearish or bullish. We can give it context. We're above the 10, that's bullish. We set our low and we've rose up above the halfway point, that's bullish. We've got this gap up, that's bullish. So we can lean on that bias and say the market's not bearish, it's more bullish than bearish. But we still have this pivot point that we have to get through. I wanted to point that out because it's easy to get distracted on the smaller time frames and from all the headlines, and to kind of be a little bearish. I mean, it seems like everywhere I look, there's negative. You know, everybody's talking about the bricks in the wall of worry and why we should be looking for the sell-off and why it's just right around the corner and it's all going to come tumbling down. But I mean, you look at that weekly chart, I'm more bullish than bearish. We are nearing the edge of the weekly expected move. 51.92, which is a cog line, and just underneath 5,200. And if you look at the ES, because that was the SPX that we were on, then we're looking at 52.21 for the weekly expected move. Now, this range is the range that we expected price to make for the entire week. That if we were to go up, it would likely go as high as that. And that if we were to go down, then it would likely go as low as that on the week. If we get that entire distance made in a day and a half, well, one, that kind of implies the market has more volatility than was built in, but two, that maybe the market's already got its work done for the week and that it has no reason to really expand farther in whichever direction we happen to have gone. We are expected to close inside this box 8 out of 10 times. If you're looking at anything other than the S&P, it's 7 out of 10. So even if we do break out of it, the bias is still that we would come back in the box by the end of the week. You could take last week for an example, where we broke out to the downside. We still managed to come back in. We've expanded 1.25 plus above the 10-day. Now, on average through the year, for just this year, that's about as high as we've been before everything changes. So this is distance from 10, right? If you put a 10-period moving average on your daily chart, that's what we would be looking at. That's what we are looking at in essence. But every market has a relationship with its 10 that's different from any other market. You can't compare Tesla's 10 to Apple's 10. So every market uses that 10 differently. With the ES right now, 1.5% above the 10 on a daily time frame. That's it. That's where we've been turning around on the year. It doesn't mean we're going to pull back. All we have to do is stay in one spot and the 10 will come up to us. It's just the way it works. It's called correction through time rather than correction through price. that sounds like a cute little catchphrase, but it's not actually just a catchphrase. It's another one of those things that you can dig into and research. There's actually a lot more to it when it comes to topping patterns, bottoming patterns, and market corrections. Correction through time is a concept to dig into. So we are expecting to pause here and or reverse and move back towards that 10. Just keep in mind, we've been 1.5%, 1.25% away from the 10, and 2 days later, we've been on the other side of it. Or 1% above the 10, and the next day, we're underneath it. So we can pull back sharp and fast. Nothing says that it has to be a gradual decline back down. And now when I zoom out, you'll see that we've been higher than 1.5 before. We've got a long history of doing that. So we don't have to pause here. It's just where we have been pausing all of this year. If we look all the way back to January 1st, well, January 3rd, for the entire year, that 1.5% has been a solid line in the sand. So Spot Gamma says that we should range. The pivot channel says we should range. Distance from 10 says that we should range. That's 3 different check marks that say this shouldn't be a big breakout trend day. I'll remind you again, that doesn't mean we can't have one, just that the likelihood of us having one today continues to fade when we look at all of these different things that say it's probably going to be a range day. We're also 1.25% above the 10-week. Now, when we look back over the year, we've been holding, 2%, 3%, 4% away from the 10-week moving average. So 1.25 is nothing compared to that. Well, they're pumping AI again this morning through Apple again. Seems like Apple is the left for dead dog that's coming back. It's getting a lot of positive press. Just seen that come across the screen. That's why I mentioned it. So we've got a lot of reasons to believe it's going to be a range day. I would look for anything that discounts that. Price would be your clearest indicator that it's not going to be range. If we break this Globex high and expand beyond it more than the 1.236 fib level, then I would start targeting the half, and then past the half, I would target the call wall, and beyond that, the upper ADR. If we break to the downside below our own Globex low, and we get through the 1.236 on the downside, then I would target the volatility trigger or today's pivot point, get below that, focus on 0 gamma, and then the lower ADR. I find it really hard to believe that we can hit that lower ADR though. With the pivot point and the 3-week moving average, volatility trigger, even that put wall should be like concrete. They will monetize their puts there. The market would buoy off of that point. The only way I could see that we break through those lower levels is if the news is so negative. Say another war breaks out somewhere, or this situation in Gaza just goes completely sideways and really starts to break down. That could send us through those lower levels. But we don't have anything on the economic agenda today that would turn us negative enough to break those levels. So it would have to be some other news. This is advanced decline on Thinkorswim. Go to the Visualize tab, choose Index Watch, change it to whatever index you watch. They are detachable, so you could put in the NASDAQ and detach that, put in the S&P, the Russell. I mean, you can look at all of them, even one for the FANGs if you wanted to, because you can build custom watch lists, stick it in there and monitor those. It's advanced decline, but it also has money flow in it. So it's really useful for looking at where the money is going. And I like to use these for divergence. If it's going to be a sideways day, we're going to be expecting about a 50-50, right? It don't have to be perfect. 60-40, even on one side or the other, doesn't really matter on the advancing and declining on a sideways day. But watch that money flow too. It can give you a little bit of a heads up. So if you have price going up and more issues advancing and declining, but more capital is declining than advancing, you know, maybe reversals, selling into strength or buying into weakness, reversal plays would make more sense. But if you have money backing up whatever we're doing and price, if you have all three of those in agreement, you're likely going to continue that drive in whatever direction we go. Sideways to higher is my baseline bet, since we have all those levels underneath us. The KWEB constituents, China ADRs, are down the most. And the FANGs are down less, but still down. And then gold miners, more China through emerging markets. I still disagree with, they shouldn't even get that classification. They're no longer an emerging market, but whatever. And then more FANGs. So looking at everything that is down this morning, it is emerging markets, precious metals, and China. Things that are up, Bitcoin, the dollar, which is not necessarily good for the markets, cloud, but I'll disagree with that. A lot of times cloud computing will show after hours from last night, not pre-market moves. So we'll go to TrendSpider and get more information on this. But Bitcoin, Nat Gas, and that's it. None of the rest of these are up enough. Let's take a look at TrendSpider. Maybe we've got some pot stocks. Yeah, right there, MSOS. So pot stocks are up only a little bit of a reflexive bounce more than anything else. That's not bullish to me. We have to get it at least through the halfback of this really big bar, and it failed to do that. Uranium's up, but I mean, this is a really big cup, and now we're at an inflection point. We're either going to drop back and set that handle into place, or we're not going to get a cup with a handle. Instead, we're just going to get a cup and a breakout. You can see all that resistance from here on up, right? 31.5 all the way up into 32.5, 33. So uranium, it's been a nice run. You know, a week ago, we were sitting down at 28.5. So that's a huge move for a market that doesn't move very much. I would be cautious of an exhaustion gap at this point. I mean, Bitcoin's supposed to be up, but this isn't very encouraging. With Bitcoin up, we would expect things like Riot, which is not up, and Mara, also not up. Coin. Okay, we'll do the regular coin. Also not up. So it says Bitcoin's up, but I don't like any of that. So even the sectors are sideways without a lot of help or assistance. Yesterday, the breadth was divergent because of the Magnificent Seven, and it wasn't enough. This is the NY Fang sideways, but grinding higher until after lunch. Choppy and nasty, but we did set those higher lows and higher highs. And then finally we got that breakout where we really started to expand. But we didn't get very far on that. And then we just went sideways again. And then that last little breakout there at the end of the day, you can see how things really started to get divergent too. If you followed me for a while, you know the green line leads. So when it breaks away and cuts through everything, that's a short signal that I pay attention to. We got the crossover, the breakdown, and then it stalled out and went sideways for half the day. These other two, sure, they kept pushing to the upside, but the green line leads, and it was sideways, choppy, nasty. Then it started to rise with everything, but we're supposed to have the green line either in the middle of the channel or leading the pack at the top if we're going to be bullish. So this little rise midday wasn't enough to turn anything bullish. And then it flipped over and went divergent again. These two were sideways to higher, and this was pointed to the downside. So just a whole lot of divergence and nasty signals, conflicting data, conflicting input, which means there was no trust, no faith in any of the setups. And the same thing with the weighted AD. 250 and minus 250 are kind of those lines in the sand. We couldn't even get to those levels until the end of the day. The ticks were reasonably well from the point of view that we stayed in the green through most of the day, but we couldn't even get a 750 print, let alone a 1000 print. So no bullish push. There just wasn't any structure, no strength in the move. And so far, today's looking to be a lot like yesterday. You can see the reversal in the breadth, though, especially on the NASDAQ. Right around noon, everything changed. And we started to increase on the advancing versus the declining issue. Same thing for the S&P. We had kind of bottomed out around 11, double bottomed about noon, and then started to increase more on the advancing minus the declining issues. So watch the news, watch the clock. I think it's going to be another day a lot like yesterday, unless something really big in the news hits. You got your pivot points and levels. So be careful, be safe, and I'll see you all tomorrow.